Welcome to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq, and joining me at MarketSite is JJ Kinahan. He's a chief strategist over at TD Ameritrade. As always, JJ, thank you for being in New York with me.
Always a pleasure to be here, Jill.
And we're getting the final reading for the Investor Movement Index for 2017, and it hit another record high this year.
Yeah, it's been a really amazing year in the fact that, Jill, our clients have continued to slowly but surely believe more in the market, if you will, and expose themselves more to the market. What I'm very happy about, and again, it measures clients who engage with the market at least once a month, you haven't seen that all or none mentality that retail has too much of a reputation for. It's been a very measured buy into the market, and it's rewarded the clients.
Right. I mean, so December's reading was 8.59.
Yes.
I mean, it's been over 8, I think, for the past couple of months.
The past couple of months. And so, again, our clients starting to, buy some things and then buy a little more things and slowly but surely, I always joked at the beginning of the year they were at the knee, then to the thigh, and now they're probably up to the chest as far as the water goes.
Well, let's talk about the IMX in 2017. I've been covering this, I believe, since 2012?
Yeah,
I think I was the first reporter.
Yes. And don't think we don't appreciate that, Jill.
But I've been covering this for 5 years, and for 2017, this was the most extreme move to the upside that I've noticed.
It has been, and what we saw is, I think, what a lot of people in the market saw this year. At the very beginning, there was people buying, but sort of afraid to do, very tepid in doing so. As the year went on, people got more confident because it is the market that doesn't quit.
Right, and then we also saw a lot of volume towards the end of the year as well, with some big days. What was the largest day for equities? November 29th.
Right.
Options, October 27th. That was really interesting to see that in Q4.
It was, but we also, if you think about it, it's comparing it to a low volume year overall. So I do think that has part to do with it. And there wasn't, you tend to get a lot of options volume and stock volume on some down moves. If you think about it, outside some of those moves in August where we had some geopolitical events involving North Korea, the market was truly never tested at all this year. And every time it was sort of buy the dip. And the one thing that I'll look, is to talk about what I look for this year, one of my bigger fears this year is that the buy the dip mentality, people buying it down 1-2%. If it goes down 5% and then goes down 8%, do they turn to sellers and make that an exponential move to the downside?
Was there a mix in the most widely held stocks that you saw for 2000?
There was. I think some of the interesting things, pretty consistently throughout the year, you saw the Amazons, you saw the Facebook, although Facebook was not in the December report, Microsoft, Bank America, but what you saw this year was Tencent, Alibaba, both bought all through the last quarter as those stocks, people they may not be a believer in the American retailers, but they're certainly believers in the online retailers for China. And AT&T and Verizon through most of the year were buyers. In December, our clients turned sellers on them, which I take more as a comment on yield than anything else. As the government, the Fed, I should say, looks like we may have 3 raises this year. We just had a raise. So I found it very interesting. Verizon and AT&T in December rallied 10%, and our clients were sellers.
But we saw a lot this year, the income-producing stocks that were on the move, or anything with a dividend or a yield, because where else are you going to get any sort of income in your portfolio, with the exception of the U.S. equity market, right?
Absolutely.
Do you see that for 2018? Will we get a repeat for 2017?
I don't think we'll get a repeat. It seems just hard to believe that the market can go up unchallenged.
Right.
But for yield, I think that, again, you'll see more back and forth. Because as it looks like the Fed will raise rates, if they don't raise rates, I do think that what the Fed will do will stay in question. And as they said in the Fed minutes, and I think it's the other thing that people should be looking out for, is that when inflation does finally come, it may come in an exponential fashion and really quickly. So they may have to act very, very quickly to tame inflation. And we saw, at least at the last Friday with the jobs report, that 0.3% rise in wages. At least wages are now starting to keep up with expectations.
Do you think the market can handle a volatility shock? Economic data is improving. Corporate earnings have certainly been improving. I think it's more the market has moved on just besides tax reform.
Oh, I think absolutely.
I mean, there definitely is
at the end of the day, earnings drive the markets. And earnings have been really, really good. Let's not kid ourselves. The outlooks have been really good as to what earnings will be. And you're seeing strength in financials. Your technology has been amazing. You're seeing strength in housing. And you look back to the October housing report where the new housing report, 50% of the houses that were already had deposits on them hadn't even broken ground. So people are confident in the economy right now. There's a lot of really good things going on. I'll use Friday's jobs report. Many people said it was such a disappointment. I say, okay, the 20,000 retail jobs, I agree, are a disappointment, but that's sort of a separate industry trying to figure itself out right now. The rest of that report was really good. Construction, mining, business-to-business services are where we're creating jobs. I'm sorry, not mining, manufacturing.
Right.
Your healthy economy has construction jobs and manufacturing jobs. In the last 6 months, we've seen those jobs increase significantly. Those are careers.
They're good salary-paying jobs that will drive the
We're
economy.
creating careers, not just jobs, and that's a difference. So the next thing that should see pressure because of that will be wages.
All right. Well, thank you very much for joining us at MarketSite.
Always a pleasure.
And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.